And developers have this habit of making things overly flexible and complicated. And that's what we kind of saw with our MVP. So last year when we decided we have enough data to go forward with 17 hats, we decided to hire a director of UX, and that was really our first big hire. That really helped to focus on the product. Secondly, customer support. I mean, the guys that work for me in customer support, they have worked with me at other ventures, so they kind of started when we launched 17 hats. I know there's this wisdom out there that says you have to do customer support yourself, and I think that's very helpful if you're starting slowly. But when you have to support hundreds of users right after you launched, you can't handle the users as well as improve the product if you're also responsible for development. I think hiring some help to manage users is pretty critical as well, because that way customer satisfaction goes way up because they're being heard, and then you can also improve the product.
Obviously, you have to have money to do all this.
Yes.
You mentioned getting a round of investment money. How has that changed things for you?
Well, we just closed yesterday, so we haven't started spending the money yet. And up to this point, we were kind of bootstrapping. It helped that we had the MVP that brought in a little bit of money, and then I had a previous company that was profitable and I could help fund our operations. But we were running out of cash really quickly until we launched.
Okay, a related question then. Are you concerned that having investment money, having investors who want to see a return on that, are you concerned with pleasing them at all? How do you balance pleasing them and keeping that company culture and structure that you've already set up?
Well, it's about finding the right investors. When we spoke to several investors, and we had a couple of different offers, and you want to find the investor that you really gel with. When I met this investment group, I went back and told my wife, I don't even care if they invest or not. These are just people I want to know, because they have so much knowledge and so much experience that just knowing them is going to help the business. I didn't tell them that, of course. Having the money on board, obviously I want to please the investors, but I think the interests are aligned so much that I'm not worrying about having to run everything by them. They don't want to do that either. They don't want to be babysitters, right? I mean, they are investing in the team and they believe in our vision, or they would not have come on board. I don't think it will really change the company culture. I've had a previously funded company 15 years ago during the .com bubble, and if you have the right investor and you just communicate open to you, they want you to succeed, right? And I think where a lot of founders go wrong is that they see it as an us versus them kind of game, and they don't keep their investors up to date until it's too late. At which point the investor, I think, rightly gets annoyed. So if you bring problems to them before they're a real problem, they can help you sort those problems out, and you can really benefit from their experience. Because very often, especially at the seed level, investors have a lot of experience. They've done this before, and you want to find investors that are happy to give their advice, but are also have enough trust in you to make your own decision.
You mentioned the .com bubble, and I'm not sure that we're in another one or not. How have things changed from mid to late 90s to now?
I'm based in LA, so I think it's very different here than it might be up in Silicon Valley. And during the .com bubble, I was actually in the Netherlands, where unfortunately money was also not as available as it was in the US. I remember looking with some envy to what was going on over here, because our struggle to raise money at the time was definitely harder. These days, the things that get funded have to show some traction. Gone are the days where you walk into an investment group with just a business plan and no traction whatsoever. What we did last year is we focused on the product first. So when I started reaching out to investors 2 weeks after we launched, I could say, hey, we just launched. We already have paying users. We have revenue. We have proven that this product is needed. Here's how much money we need to raise in order to get to the next level. And if you can raise money to accelerate your growth, it's a lot easier than if you have to raise money to cover your overhead, because that is far riskier than putting money in for the growth.
Does it make you nervous to play with other people's money?
It does. Terrifying, actually. At the same time, because we went out when we had traction, it's a very different mindset. Like, I would not have been comfortable to raise money a year ago because I wasn't sure if this market really existed and if we could build a product. Now that we have done those things, I know we'll be successful and this money will help us to become more successful. But yes, there's absolutely some anxiety on having the responsibility to manage their money well. But I think that's a good thing.
It sounds like, though, you've built the fire, they're just providing gasoline to throw on it.
Correct.
You find them or they find you?
Here's the funny thing. I found them through a friend of my wife, actually. So I started the fundraising process 2 weeks after we launched. I actually went to this quick pitch competition of Tech Coast Angels in Newport Beach in California. Did this little 2-minute pitch, got a lot of interest from the investors there, got an offer from one of the firms there. Didn't feel it was a good fit. Great guys, but not the right fit for us. And I was talking to one of my wife's friends, and he had just met this investment firm about a week earlier through a conference, if I remember correctly. And he said, hey, I think these guys might be a good fit. Let me shoot you an email. And then that was kind of done. I walked into their office after I sent them the PDF, and they're like, we love your concept. We believe in what you're doing. We think this is a great fit. And I didn't even have to pitch them, which was great. The downside of that story is that warm introductions definitely are the way to go. And I think that's a hard thing because, I know we were looking for potential investors during the summer, like who do we want to reach? And I didn't have the network personally to get in touch with some of these guys. And when you just shoot them a blank email, you get a very nice rejection letter, a day or two later. In this case, I came recommended through a friend, and things went very quickly after that.
Okay, I'm going to ask you an either-or question, and I'm going to take you off the hook. So this is not talking about your company, but which is better, to have the proven business model, to have the skill set, or on the other side of that, to know people and have warm introductions?
In the long run, the first. In the short term, probably the second. I mean, if you look at certain companies, and I won't name names, that raised a ton of money because of people that they know, but eventually don't make it. They seem like a success story for a couple of years and then they fold, versus the company that is really creative, manages to keep going even though they don't have the money. In the long run, once you're successful, people will want to invest. And so I would always go for the first option, as long as you can bootstrap it and show some traction and then get some publicity. And at some point, you'll get those warm introductions one way or the other.
Right. Cream rises to the top. I absolutely agree.
Yeah. I'd much rather have a good product. We struggled during the summer. I mean, it was really hard to see the bank accounts go down every month because obviously we're building the product. We had no revenue. And it would have been nicer to have some money in the bank. On the flip side, at that point, you'll have investors breathing over your neck. You're like, when is it done? When is it done? Which creates a lot of stress. Now the stress that we had was still there because we had to launch, but at least we didn't have to worry about other people at that point, and we could really focus on the product. And if we're going to launch a week later, because we had the better product, so be it. We didn't have to explain ourselves to anybody. And now I am confident enough that the people that we're working with are in it for the long run and they're not worried about monthly fluctuations. Because with any startup, you're going to have fantastic months and you're going to have months where things are not as great.
I think that tension that you're discussing that happened to you in the summer, the watching the bank account go down, I think that can totally be the fuel that propels you to the next level, though, because on the flip side, what we're talking about, sometimes when companies get too much money, I've seen a lot of founders, they all of a sudden think that they're successful because the bank account has a lot of money in it, yet they're not showing a profit. So I can see the pros and cons of both.
Yes. Yeah, and I'm old-fashioned, and I think a company exists to make money and and have good cash flow. I think it makes a lot of sense to invest into future revenues, but a company needs to have a business model. And I think by bootstrapping it and having to have revenue, you actually get a much better product, because it's very easy to get 1 million users to sign up when a product is free, but they may not actually even use it. It's a completely different thing to get 100,000 users that are actually paying for the product. Because I think paying for the product really is the ultimate endorsement that you can get. Like, this is a good product that people are willing to use.
Well, there are no better bootstrappers than the freelancers of the world.
Absolutely.
17 Hats is made for those people.
Mm-hmm. And when my wife started her business, she really needed something to manage her business better. And when people start a business, they don't tend to think about the things that are needed from an administrative side, whether it's the invoicing or the contracts or bookkeeping. I mean, most people don't do the bookkeeping because they're not trained in it. It's way too complicated, and you have to start this program called QuickBooks to do it. So the idea behind 17 Hats is to really help people, give them the tools they need to manage their business on a daily basis, but also to automate many things. Like one of the great things is that it's in 17 Hats is our workflow feature. So if you're a photographer that has an event like a wedding, you can send out like a wedding questionnaire 2 weeks prior to the event automatically. Or if you're a designer, when you get contacted by a client, you can send out a pre-client questionnaire automatically to get all the information you need for the project. By automating these certain tasks, such as questionnaires or sending out a contract or an email, it really frees up your mind to focus on why you became a business owner to begin with, which is your passion for your career or your profession.
And that's absolutely the biggest frustration, especially for solopreneurs. I'm sure you've read E-Myth, and the entire book is basically that.
Mm-hmm. Yeah.
You spend all the time doing the stuff that you're trying to get away from.
Mm-hmm. Computers are very powerful, but most people are not developers, so it's very hard for them to harness that power. And what our goal is with 17 Hats is, because the system knows what's going on in different parts of your business, is to make the system work for you and kind of give you the power of automation without needing to hire a big corporation to set that up. So it allows you to create processes in your business kind of organically, which is, again, something that came up in the E-Myth book. Is like, you need to create those processes, because that way the business can kind of run by itself while you focus on actually executing the business.
Exactly, doing what you do best. Well, Donovan, thank you for being on Red Podcast. If you are wearing 17 hats and you want to wear fewer, go to 17hats.com. Great service. Another thing about it, Donovan, that I think is worth going to check out the site for is the marketing of it. And we've talked a little bit about that today, but I love the video. You've done such a great job of explaining what it is with just a simple video. You can go there and in 30 seconds or a minute understand what it is that you're selling. And I think that's helped your process a lot as well as far as getting more sales. That was my conversation with Donovan Janus of 17 Hats. 17hats.com is his website. And even if the service doesn't sound like it's a fit for you, definitely go there, 17hats.com, and look at how he's conveying his message so quickly and efficiently. Thanks so much for listening. We appreciate you. If you like Red Podcast, please tell a friend. Leave a review on iTunes, Stitcher. That will help us to spread the real entrepreneur development message. I'll see you on the next episode.
You've been listening to Red Podcast, Real Entrepreneur Development. Subscribe today using iTunes, Stitcher, or via RSS at redpodcast.com.